Welcome to the Sykes & Company PA video blog.
Yeah, under the Tax Cuts and Jobs Act, there's a whole new set of rules for inventory and how to handle that with the cash method of accounting. You can leave inventory as is, keep it on your books. Really, you don't change anything. You can treat inventory as non-incidental materials and supplies, which essentially, generally speaking, is like keeping the inventory on your books. You won't see big change there. One of the areas that others in the industry are touting is the de minimis election. So if you elect to treat inventory as non-incidental materials and supplies, and you elect the de minimis election, essentially you can write off all that inventory for the tax purposes. Now, what's kicker about the de minimis election you need to be aware of, if you're doing it that way, you have to write it off on your books and records. That is clear cut in law. So if you're doing it that way, you're going to be writing it off on your books and records, and that's going to absolutely diminish any advisory, any financial statements, any numbers you get out of that accounting system will be essentially worthless if you do not have inventory on the books. So you have to be aware that you don't want to go that route unless you are sure that you've spoken with your advisors on that's what you want to do. The other option that pharmacies have available is to treat it according to their books and records. And the Congress was not clear at all what that means. IRS has no idea what that means. They're on record saying we don't know what that means. There's been no clarification of that. So under this method, essentially, it's assumed you can write off inventory on your tax return, but keep it on your books and records. And the journal entries that you're doing between book and tax is considered your books and records. So there's an argument that you can write it off for tax purposes, but keep it on your books for accrual accounting and for financial statement purposes. Whereas, as I mentioned earlier, when you do the materials and supplies, and then you make that de minimis election, you have to write it off on your books and on the tax return. So if you've been working with advisors that haven't really clarified the uncertainties in this inventory area, and you've taken maybe an aggressive position as it stands now, it may be totally fine in the future when the IRS clarifies, it may not. But if you've taken a position where you're writing off inventories, you do need to be aware that if an IRS auditor were to come in and challenge any position you have taken, and when you're going to see penalties and interest potentially under reporting of income. Those are essentially the options you have with inventory, and you have to weigh all those options to determine what's best for you. I know Sykes & Company, we have our preferred method of treating this topic. We discuss the options with the clients. We advise them on the issues, the concerns, the uncertainties in this area, and make the best decision with the client on what they need to be doing. So we're happy to go over that with you if you ever have any questions.
Thank you for watching. If you enjoyed the video, we invite you to subscribe to our YouTube channel.